Hello and welcome. You're watching News 9. This is Business Plus. We're bringing you stories from the world of business, policy and economy. We're starting this bulletin on a not so very positive news this afternoon. Adani Group stocks and Adani Group is back in news once again. Allegations have once again surfaced that have resulted in Adani Group stocks stumbling and setting, in fact, political corridors abuzz. The Organized Crime and Corruption Reporting Project, also known as OCCRP, an investigative project, alleges that hundreds and millions of dollars were invested in publicly traded Adani Group stocks through Mauritius-based opaque investment funds. Now, these funds in turn were partners of promoter family. They were related to the promoter family. The fresh allegations by an organization that is funded by likes of George Soros and Rockefeller Brothers Fund comes month after US short seller Hindenburg alleged stock price manipulation and accounting fraud that wiped away close to $150 billion in value for all Adani Group stocks. Now, Adani Group has denied all allegations made in Hindenburg as well as made by OCCRP. We are tracking Adani Group stocks. We're also tracking all these developments that are going to be a buzz not just today but for the coming next few days. A lot of action that is coming by the way of Adani Group stocks. We'll try and also bring you the latest as far as stock market is concerned. With me in the studio at this point in time are my colleagues Krishna Kumar and Suyash Maheshwari. Let me first begin by asking you, Krishna, essentially, what we know so far are allegations and, of course, rebuttal that is coming in from the Adani Group. But all focus, of course, remains solely on Adani at this point in time. Serious allegations at that.
Oh, absolutely. And it's been 8 months since the Hindenburg research report came out. And 8 months after that comes this OCCRP report, which has caused as much damage, the same kind of damage that the Hindenburg report caused the Adani Group stocks. As you saw what happened when markets opened for trade this morning, Adani Group stocks on average, all of them down 4 to 5% in the red right upon markets opening. So this is, Armageddon 2.0 as far as Adani stocks are concerned. That's how devastating the impact has been. Bear in mind, Adani in their rebuttal Adani Group in their rebuttal has said that the markets were in fact expecting this kind of a negative report to come out either way, and that you saw about 35,000 crore rupees worth of market value being lost in yesterday's trading session on Wednesday, because there was a lot of buzz about the fact that there could be something to this effect that was going to come. So Adani Group in that statement making that point that we were sort of expecting this, and this in a sense takes off from where the Hindenburg report left, and essentially saying the fact that if the Hindenburg report has no merit to it, then there's absolutely no merit to the OCCRP report as well. So that's been the Adani Group's rebuttal. But for now, stocks in a tailspin.
All right, we'll also try and get you an update on how stock ended. Suyash, run us through how stocks ended. They were as low as 4%, at least Adani Enterprises, Adani Ports, Adani Power, all of them were in the red today.
Yes, Shweta. So most Adani Group stocks, in fact, barring ACC, ended today's session deep in the red. Now, Adani Enterprises, Adani Transmission, Adani Ports were among the top losers. They fell nearly 3% each. Now, the losses were about 4 to 5% as in the morning trade, as Krishna mentioned. But we saw some buying activity at lower levels. And as a result, Adani Group and at least Adani Enterprises and Adani Ports recouped some losses, and they were able to end, although just slightly above the day's low, but still deep in the red with losses of about 3%. ACC was the only stock that ended today's session in the green. It was up about 0.2%, whereas all other stocks fell 3 to 4% in today's trade.
All right, all stocks in the red. It's a sea of red, as Krishna often calls it. Let's quickly get in our expert who's joining us at this point in time, Avinash Gorakshakar, Director Research, Profit Mart Securities, with us here in the studio. Avinash, thanks very much for taking time out. I want to first begin by asking, what's your view of the Adani Group stocks? A sea of red there. Is it just a sell-off that the market was expecting at the moment, or as we are reading into it, it's because of the massive reports that has come out and perhaps some sort of jitters there for investors all across the world?
So I think, Shweta, my sense is that it was a big negative surprise which the market was not expecting at all. In fact, this OCRB report which has come out is now another negative surprise, at least for the Adani Group in the very near term, because until and unless the dust settles down and things don't get more clarity, I think the markets are now wanting a clear solution for all this. Hindenburg report had come out. There was some expectation that this report did not contain anything negative for the Adani Group. But this second report, which has come out, clearly points out that a lot of offshore entities were involved in buying of Adani Group, stocks. So I think this is now something which the markets will take some more time to digest. Across the board, I would say that you're going to see a lot of volatility in these counters, at least for the next few months. It's not going to be easy for this event to be wiped out that easily. Although the management has refuted all the claims, I believe the market would obviously take its own time to digest this, and I think you're going to see a lot of volatility in the coming few months. So I think definitely this is not good for the markets also, because whenever Adani Group stocks fall, they have a negative impact on the broad market sentiment, and that is exactly what happened today, which was obviously also the monthly expiry day. So both these factors played, against the market sentiment.
Avinash, just one thing before we move any further. I just want to understand at this stage, how much more damning is the OCCRP report as compared to the Hindenburg research report? Because both of them allude to the same thing, which is offshore tax havens, opaque offshore tax havens from where money has been routed into Adani Group stocks in the Indian markets. I just want to understand if everybody thought Hindenburg was the most damning thing possible, and now comes this OCCRP, which is making it even more clear, if not less.
So I think, Krishna, it's difficult to quantify how much further damage, but I think at least in the very near term, I would not expect a significant, upside or any kind of re-rating for the Adani Group stocks, because I think till the time, there is a sense of clarity. I think now the regulator also needs to come out with a kind of a more clearer statement as to what kind of angles are there in this report. Although, most of the allegations are common, I think this second report is definitely little, negative from the market standpoint of view. So I think you could see a little bit of weakness in these stocks for the next few weeks. Afterwards, of course, we have been seeing that, very large, investors like GQQ have invested in these companies. Now, if some kind of follow-up buying comes in, then I think that could be a little relief for these stocks. Otherwise, I think these stocks are going to follow a negative trend, at least for the near term. So I wouldn't be surprised if we see a further correction here. So it's better to stay away from this kind of group stocks for some more time.
And Shweta, even if you look at it, as Avinash and Krishna said, there is not much new in the new report, and even OCCRP just named 2 individuals, and even then they are saying that there is no direct evidence that they got their money for their investments from the Adani Group. But the documentation suggests that they were in cohorts. So,
but no, I think therefore it's important to set context. And Krishna, perhaps if you could help set context. The allegations are that there are certain opaque structures, funds that have invested in Adani Group, and these opaque structures are in fact run by people who were previously associated with not just Gautam Adani but Vinod Adani, the elder brother of Gautam Adani. So essentially alluding to the fact that Adani Group was investing in its own stocks through these opaque structures. Those are serious allegations, because remember, SEBI has been actually investigating those allegations, have been looking into these opaque structures and hasn't been able to pinpoint on what the ownership is. This report actually pins out the ownership, and not just pins out the ownership, also establishes the relationship between the ownership and the Adani Group.
Yes, but then again, that is incidental. You're talking about 2 individuals who were board members of Gautam Adani's elder brother's companies once upon a time. And, and those individuals, there is still no direct link between what those individuals do with the Adani Group of companies. So, I mean, even now, it is conjecture to a certain extent. It's still difficult. This report still doesn't tell the exact trail between whether these 2 individuals that they have named directly invested, what the money that they handle directly was invested into the Adani stocks. My point here is that if you want to put it into context, both the Hindenburg report and this report essentially talks about the same kind of routing of money, international routing of money through tax havens. It's not even like 2 different allegations. What strikes very similar is that they're very similar allegations. And this one, they've spelled out the exact tax haven, which is Mauritius. They didn't say general tax havens. We're talking about a Mauritius tax haven. These 2 individuals who
and 4 companies and funds that have invested in Adani Group.
Exactly. So the only link that is yet to be figured out is that was the promoter company directly involved in channeling these funds into their stocks. That link, even this report doesn't definitively establish. There is enough and more evidence to show the fact that these two individuals have been associated with the Adani family for a very long time, and they themselves are players in the market. So, I mean, yes, I mean, if you write a movie script, you know what the climax of this is. But unfortunately, this is not a movie script. This is real life.
Okay.
SEBI's report that you're talking about, Shweta, I think we all have to wait for what SEBI's report is going to say, and more importantly, how SEBI's report could change with the findings of this new OCCRP report, OCCPR report as well. So I'm really interested to know how SEBI is going to incorporate these latest findings into its report. Bear in mind that hearing at the Supreme Court
has been deferred.
We don't have a real date on us. So there is a report that has been submitted by SEBI on the 25th of August to the Supreme Court of India. We don't know the contents of that report. And now comes this. Point here is that SEBI is watching all of this. So whether SEBI will say, dear Supreme Court, hold on for a second, we need to redo this report and bring it back to you. We don't know.
Okay. And to add, again, to give some context to our viewers, why this opaque structure is such a big deal. Now, two things, because if Adani Group is able to trade in their stocks through these tax havens or opaque structures, their activity will not fall on the radar of regulators as well as retail investors, so they won't be able to track.
Right, and I want to understand why opaque structures is a problem.
Exactly. So,
and so let's also get Avinash into this conversation. Avinash, essentially from a markets regulation point of view, what is the problem? Is the problem that these structures are opaque structures, or the fact that people managing these opaque structures have relations with Adani Group? What exactly is the legal and moral compunction here?
No, I think the key question is most of these opaque structures have been working, hand in glove with the Adani Group, as the report suggests. And I think, as Krishna pointed out, I think now the markets would be looking at the SEBI report, in the light of the new development which has come out of late. So I think, is the report going to change, or is there any material, development going to happen post this, issue? So I think this is something which the markets should be looking at very closely, because I think now the report assumes even more importance, and I think the markets should be looking at the findings of the SEBI report very closely. And till that time, I think you're going to see a very negative kind of trend in these companies, because it's a question of credibility. The management has put it out very clearly that they have rebooked all the claims coming in this report. But I think it's finally the SEBI report which will make the final verdict. So I think it's better to wait and watch. But at least from a stock market point of view, we feel that at least the next few months, or maybe another couple of quarters, the volatility in these stocks is going to increase, and we may not see any big re-rating happening.
So volatility is going to increase. There may not be a re-rating. Essentially, that's the view coming in as far as markets is concerned. What's the broader impact going to be on Nifty and Sensex as a result of Adani Group stocks taking a beating? Will there be a massive impact, Avinash, that we're anticipating?
Yeah, I think as I mentioned to you that all these businesses are Adani Group stocks are very solid businesses. But I think if you look at the broader market today, the Nifty was down by almost 100 odd points. The Sensex was down by almost 200 odd points. So I think whenever we see a negative kind of trend in most of these Adani Group stocks, we find that the broader market also attracts a heavy selling. So I think you're going to see even the broader market actually getting impacted if this negative trend in Adani stock continues. And I would not be surprised that the markets could attract a further level of profit booking, or maybe a little bit of liquidation in the light of these negative developments. So I think till the time the SEBI report doesn't come in, my sense is the markets are going to be on a slippery wicket. We were not expecting this negative surprise at all from the Adani Group, and I think this has happened very, very suddenly. And this is something which the market has not liked. Anything which happens suddenly and without any proper notice is definitely something which the market doesn't like. And I think this is going to take a lot of time to digest. So I think the broader market are also going to be impacted. Plus, Adani Group stocks are going to be slightly under pressure. I would not be surprised that despite good financials in Adani Ports, Adani Wilmar, Adani Enterprises, these are stocks where people would now start doubting the numbers. So I think it's better to wait and watch for some time before the dust settles down.
All right, better to wait and watch. That's the word coming in from Avinash. Avinash, stay with us as we are talking about Adani Group stocks and Gautam Adani in particular. Let's also track the trajectory that billionaire today has seen since inception of Adani Enterprises, the parent company of Adani Group, what sort of inception that Adani and Gautam Adani and his companies have seen, how far they have grown, what sort of stock impacts and major key events that the group has witnessed since its inception. So over to you, Suyash.
So Shweta, when you talk about self-made billionaires in India, the name of Gautam Adani is perhaps the first name that comes to mind. Now, Gautam Shantilal Adani was born in a family of textile merchants. However, the young Gautam wasn't interested in his father's business and instead moved to Mumbai in the 1980s to work in the diamond industry. Adani's first big break came in 1981 when his older brother purchased a plastic unit in Ahmedabad and invited the 19-year-old Gautam to handle operations. The venture created a gateway for Adani to global trading via PVC imports. Now, in 1993, Adani founded Adani Enterprises, which was formerly known as Adani Exports. Now, initially, the company primarily focused on trading of power and agricultural commodities. However, it wasn't until 2000 that the group embarked on an ambitious journey of diversification. Now, this era marked the group's entry into sectors such as power generation, agri-businesses and infrastructure development projects. And by the end of 2010, Adani Group's relentless pursuit of growth led to a substantial increase in its market value, and the conglomerate's strategic investment and successful ventures also helped it diversify across sectors such as ports, power, agri-business, business. Now, simultaneously, Adani's close relationship with Prime Minister Narendra Modi drew scrutiny, leading to allegations of cronyism. Now, the conglomerate secured number of infrastructure and energy contracts both domestically and internationally following Modi's assumption of office. Now, one of the standout chapters in the Adani Group's rise was its foray into renewable energy. In early 2020, the group placed strong emphasis on sustainability by venturing into renewable energy projects. Adani Green, a subsidiary of the company, emerged as a global leader in the renewable energy space. This move not only aligned the global environment trends but also positioned the group as a frontrunner in India's transition to cleaner energy sources. By January 2023, Gautam Adani's wealth had surged, making him the richest man in Asia and the third richest man in the world. And then came the Hindenburg report. On January 25, the New York-based forensic research firm released the result of its long-term investigation, calling the conglomerate the largest con in corporate history. In the aftermath of the report, the stocks of the Adani Group experienced a significant decline, witnessing a loss of $150 billion in market value. Now, despite a subsequent recovery over the past few months, during which the group has repaid portions of its debt and managed to restore some of investors' confidence, the stocks are still down approximately $100 billion below its previous levels. And as we saw today, the stocks took a beating once again once the report and the allegations that were highlighted by Hindenburg and now OCCRP came to light, and the stocks were down 3 to 4% in today's trade.
Stocks were down 3 to 4% in today's trade. Thanks very much, Suyash, for summing that up. That, of course, is the journey, Krishna, of Gautam Adani, the man as we know him, the man as he has been portrayed to be in the media, and the man that made himself to be a billionaire and in fact not just envied for his wealth but also envied for the diversity in his businesses. All of that, in fact, in a sense, came to a halt, and a screeching halt suddenly on 24th of January when Hindenburg report made some very serious damning allegations. Since then, a part of that wealth has been recuperated, but the stocks, and correct me if I'm wrong, the market cap of all Adani Group companies is still down by about $100 billion. So they haven't really gone back to pre-Hindenburg level just as yet. And all of this, of course, is going to again weigh in on the group's 35,000 crore rupees lost in market cap in just 24 hours. So big numbers there as far as the market cap of all Adani Group companies is concerned. Another interesting point to note perhaps will be the performance of PSU stocks, because Adani PSU stocks and Adani Group have a relation, Suyash.
Yes, so the exposure of the PSU banks to the Adani Group has raised concerns, and as a result, the PSU banking stocks plummeted today. Now, Nifty PSU index was a top loser in today's trade. It was down over 1%. So we are to see what impact. And if we have Avinash still with us.
Yes, we do.
Avinash, what will be the way forward for PSU banking stocks, especially since they had been outperformers in the recent run?
No, I think clearly, this is a sentimental fall which you are seeing in the PSU banking stocks. See, I think clearly earlier also SBI, which was one of the key lenders to the Adani Group, has clearly said that, most of their assets are backed by proper assets and basically large cash flow generating, assets. So I don't think there's going to be any negative surprise as far as defaults are concerned or non-repayment of loans are concerned, although leverage on the books of Adani is significant. But they have made a conscious effort after the Hindenburg report that, leverage has come down, the promoter pledging has come down. So I think on that point, my sense is that we may not see any catastrophe kind of sell-off, on the PSU banking stocks. This is just a sentimental kind of fall. And I think probably, markets are possibly pessimistic on the banking, especially the PSU banking piece. But I would be quite confident that most of the assets which the banks have actually taken exposure are very strong cash flow generating assets. And I don't think you're going to see a liquidity issue coming in, at least in the very near term.
All right, and since we'll have to let you go, Avinash, very, very shortly, let's also quickly get Suyash to help us understand how markets closed this afternoon. Lots of data that is expected this evening, 5:30. GDP numbers will be out. Current account deficit numbers are expected to be out later this week. All of that, of course, weighing in on the markets.
Definitely, Shweta. And as a result, the market has turned extremely volatile. Now, yesterday we saw the benchmarks opened almost 0.5% higher. But then we saw the both indices, Sensex, Nifty, pairing all the losses and closing near its near-term support of 19,350. Even today, the selling extended and Nifty was not only closed below 19,300 levels, but it also was only closed marginally above the 19,250 levels.
Okay.
Even the Sensex was down about 0.41% and it closed just above 64,800 levels. The Nifty and the mid-cap, Nifty, small cap and the mid-cap space were the outliers in today's segment, and they were able to close.
Were the outliers for a while now?
They have been outliers for a while, but the space has also been volatile. So we see a percentage rise one day and then there's some correction over there. But consistently over the last few months, in fact over the last 1.5 years, Nifty mid-cap and the small cap space has been outperforming the benchmarks.
All right, let's also get in Avinash to weigh in on the big numbers that are in fact anticipated, I'm told, in just about 10 minutes from now, as opposed to 5:30 we initially thought, Avinash. Those numbers are much awaited by markets, various estimations coming in. Will it be 8%? Will it be 8.3%? I mean, obviously, anywhere above 8% is good.
No, definitely above 8% is good. But my sense is that probably, this number may slightly be below the market expectations because of the base effect playing out. But I think one has to keep in mind that, I think on a kind of a very strong growth trajectory going forward, I think the markets would obviously like to know what are the other pieces, of macro data coming in. Like the trade deficit has come down quite significantly. I think India has been cleverly buying, cheaper crude from a variety of countries. So I think going forward, my sense is that, the numbers post-September are going to be more important. And I think, at least the markets are more concerned about the inflationary data points. This is one number point which I think the markets are yet struggling whether this will come off post-September or will continue. But I think the recent trends in the monsoons are clearly depicting that food inflation is going to be a bigger culprit.
Avinash, Nifty has, like both indices, the volatility has spiked recently, and as we saw after opening 0.5% higher yesterday, we saw a bearish takeover of sorts, and as a result market collapsed and it was trading near its support levels. Even today we saw the selling extend. So do you expect the near term trend at least to be bearish?
Avinash, we
and I
can't hear
think
you.
if we do not maintain that level, then we could probably go below 19,000. I'm not a technical analyst, but I think broadly, the markets have been struggling for the last 3 to 4 weeks to go on the upside. And I think FII flows have moderated. I think there are not many very large triggers in the markets because most of the earnings season numbers are completely over. So I think if there is no follow-up buying, from the funds, and there is no positive surprise, especially from the macro numbers which we are expecting today, then I think you could expect some further selling. But I think, obviously my sense is 19,000 is going to be a strong support level. As long as that holds on, I think we could hope that some bounce back could come in.
And what about the banking space? As we were talking about Nifty PSU Bank, Nifty Bank also ended today's session below 44,000, and it has been a rather underperformer in the past 1 month, falling about 4%. Do you expect the underperformance or rather the correction to continue?
I think both the Bank Nifty and the Nifty, my senses cannot, work out in opposite directions. And I think the Bank Nifty also would obviously logically, have a negative kind of bias, at least for the very near term. At least for the next couple of weeks, I think we'll have to see how the Bank Nifty performs. But overall, I think the structure as of now looks pretty weak. And I think you could expect some further selling if at all, some macro numbers don't come out as per expectation. Then obviously the Adani Group, the issue doesn't get resolved very quickly, because this is an issue which has just happened today. And I think if there are some further news flows which comes out in the coming few weeks, then I think that could impact the Bank Nifty and most of the PSU banking stocks, at least in the very near term.
All right, Avinash, thanks very much for joining in this afternoon, for weighing in on what the markets are expecting. Inflation numbers, of course, are going to either help or hurt. Also, GDP numbers just about to come out in 1 hour from now is going to be significant to watch out for. Avinash, thanks very much for joining this afternoon. But let's move on. Q1 GDP growth numbers will be out, as I said, about 1 hour from now, which is 5:30 p.m. Higher government capital expenditure, a pickup in service sector and a favourable base are likely to have pushed up the growth of India's real GDP in April-June quarter, which is the first quarter of this financial year, with economists projecting a growth rate of 7.7 to 8.5%. That, of course, is the range. Now, country's growth rate is, however, expected to be moderate in coming quarters of this financial year, given that there will be impact of El Nino on monsoon and sluggish exports. That, of course, will weigh in on the growth story. But as far as numbers for the first quarter is concerned, positive expectation there. Joining us at this point is Sujan Hajra, who is the Executive Director and Chief Economist at Anand Rathi. Sujan, thanks very much, sir, for taking time out. I want to first begin by asking, what are your expectations as far as the Q1 growth is concerned?
Our sense is that the ballpark estimate is 8%. So roughly we are at the middle of the consensus. So 8% is what we are looking for the quarter. But for the full year, we are seeing a number which is significantly lower. We are looking for the full year closer to 6.2% GDP growth for the financial year 24. That is FY24, year ending March 24.
All right. So an expectation of 8%. 8%, of course, falls within the range of what everybody, all experts are projecting out there. What, according to you, will work? What are going to be the laggards?
Obviously, the base effect is something which is going to help. But beyond that, we are seeing very significant traction in the services sector. For example, if you look at the passenger traffic, whether railway or whether air, these numbers are pretty strong. In other areas of services, whether we are talking about entertainment, whether you are talking about healthcare, whether you are talking about other consumer services, we think there will be a significant traction there. Manufacturing, it will be more of a so-so kind of a sector. This quarter is not particularly important so far as the agriculture is concerned, because the main crop Kharif comes in the quarter ending December and part of it in quarter ending March. So this is relatively a lean period for agriculture. So nothing much to read about agriculture. Within industry, the infra-related areas are doing well, but the core manufacturing sector there is not much traction. So on the services side, we expect a significant traction, sort of a intermediate kind of a thing from the industry side, and agriculture we are not penciling in a very high expectation.
All right, not much higher expectation as far as agriculture is concerned, but I suppose better private consumption, services, export, manufacturing, easing input cost pressure. In fact, we discussed here, all companies that reported their quarterly earnings and significant margins that they were able to save, essentially hinting at the fact that perhaps input cost has reduced. in the last quarter, the quarter gone by. That, of course, will weigh in positively on the quarterly growth. But, some more numbers that are coming in. And as we speak, fiscal deficit numbers for the quarter gone by are out. India's April-July fiscal deficit stands at about 6 lakh crore, 33.9% of financial year 24 target. How good or bad are these numbers?
So my sense is that I haven't seen the number for this particular month, but generally, if you look at the corporate tax, is the part where the numbers are not panning out very well. All other taxes number, whether GST or whether the other taxes are concerned, though personal income tax, those are doing reasonably well. But as you said that while the corporate profitability has not shrunk, the corporate profitability growth certainly has slowed down as compared to the same quarter last year. Say, for example, the quarter ending June for Nifty 50 companies, the earnings growth has been somewhere close to 6%, as opposed to a 30% plus number for the same quarter last year. So consequently, that's impacting the corporate tax collection. But going into the year, we expect this number to play out better. So therefore, what we think is that a lot of government expenditure is front-loaded, whereas the revenue is back-loaded. Consequently, the fiscal deficit number might look slightly more stretched during the first half of the year, but we think that will pan out better in the second half of the year.
All right. So fiscal deficit numbers looking stretched at the moment. As far as going into, the second quarter of this year is concerned, the ongoing quarter, the expectation are slightly muted there.
Yeah. The second quarter number can be slightly muted once again, partly because of the base effect. Also, in the recent past, we have seen that the impact of high food prices, the interest rate, the high interest rate, all these things are weighing down on the numbers. Also, if you look at the foreign trade, particularly goods trade, the numbers for the second quarter may not be particularly good, though in terms of services exports, we are doing pretty well. But the goods trade, though the trade deficit is coming down, but export performance is not particularly well. So those are kind of things which will be there in the second quarter as well.
All right, but the government feels that export numbers are going to go up. Are you looking at any green shoots emerging at the moment?
See, as I said, the biggest positive so far as the exports are concerned are coming from the services sector. Not so far.
How about merchandise export? Do you see that picking up?
The worst may be over, but given that the kind of global scenario which is prevailing, I don't see that the growth will be significantly high for merchandise exports. For example, for sectors such as chemical, for sectors such as gems and jewelry, the realizations are becoming increasingly big problem, and these are big exports. But yes, in certain areas, maybe in the context of automobile, maybe context of some of the consumer goods, the numbers might start looking better.
All right. I want to also talk about inflation. Inflation remains an untamed beast as far as the ongoing month of August is concerned. Some pressure expected to ease in the month of September, but everything in the realm of speculation, contradictory reports coming out there. Inflation is going to be very, very crucial to watch out for.
True. So what we have seen, if you look at between June and July, the monthly increase in inflation on an annualized basis for food products has been about 70%. For fuel, energy, the increase has been almost 30%. So obviously, a significant amount of momentum is getting built up so far, what we call as the non-core part of the inflation. But interestingly, the core inflation, which is excluding food and fuel, that component is actually coming off pretty significantly, and this is happening both for goods and services. So while the overall headline number, overall food inflation, these are matter of concern, but there is also some level of silver lining so far as the inflation is concerned. And if you look at the RBI's monetary policy during the month, RBI clearly indicated its expectation is that this inflation is transitory. So at this moment of time, we'll hold on to it and we'll think that this inflation is transitory. And so therefore, while we are certainly watching out, certainly we are keeping our fingers crossed, but we don't think, at least as of now, it's a very big concern for India.
All right, not a very big concern, but as you mentioned, I think vegetable inflation, pulses inflation, that's going to remain a cause of worry in the month of September. The rainfall pattern is uneven. I think that's what everybody has reported, that we are sure on. The north of India has gotten more rainfall than expected, south of India under at least by 30%. So the weather pattern, of course, uneven throughout the country, and all of that, of course, is going to weigh in heavily as far as headline inflation is concerned.
True, with close to 50% of your retail basket being linked directly or indirectly to food, obviously our sensitivity to food inflation is very high. And say we have seen last month products like tomato is showing a year-over-year inflation of 200%. There are certain other products like garlic or jeera which are showing inflation of in excess of 100%. So clearly these are the areas of concern. Now traditionally the areas of concern which remains for India in terms of food products are pulses and oilseeds. Fortunately, those inflation has not gone up too much, but we are again seeing in the food grain the inflation is going up not only for wheat, but more recently even for rice. This inflation is going up, and these have heavy weightage in the retail basket. So therefore, as I said, there are plenty of reasons for concern, but it looks like this is more of a transitory. The government also has taken quite a few supply-sided measures. For example, import of tomato, or for example, the restrictions of export of wheat and rice. So government is taking supply-sided measures. RBI has already taken demand-sided measures by increasing the policy rate. And vegetable inflation, at any case, is extremely volatile. And given all these things, as I said, while we keep our fingers crossed, but our sense is that this is more transitory than permanent.
So as you said, the core inflation has continued to ease. So will it be safe to say that if we don't see a spike in core inflation, RBI may not hike interest rates?
See, if you look at RBI's stance, RBI looks at inflation as a monetary phenomenon. So for RBI, it really doesn't matter so much whether it's a supply-sided or demand-sided, whether it's coming from core or coming from non-core. That is why what the target for inflation for Monetary Policy Committee is the headline inflation rather than core inflation. So therefore, so long inflation remains high, that there are reasons that RBI will be worried. But having said that, RBI's own assessment has been that this is more of a transitory. So if it's transitory, obviously RBI won't be, there won't be any major reaction from RBI. But having said that, if the inflation number remains high, retail inflation number for the month of August remains high, and there is indication even for September this number is going to be high, then I don't think RBI will have much choice but to do at least some optical measures towards controlling inflationary expectation. So I think muted core inflation is a silver lining, but RBI won't be putting too much of weightage to that factor alone. RBI has to look into the overall inflationary situation, and more importantly, the situation in terms of inflationary expectation. So therefore, if there is pressure on inflation, RBI hands will be tied, and RBI has to go for some level of at least token tightening of policy in that situation.
But then if there is a revision of policy rates on the upside, will that not stifle the demand, that at least that the recovery in demand that we are seeing currently?
See, the point is that there are various channels of transmission of monetary policy, and see, RBI and it's quite well understood that there is a sacrifice between growth and inflation in the short term through monetary policy action. What RBI's objective, what is the objective of every central bank of the world, is to basically stabilize the medium-term inflation. So for that, if there has to be some level of growth sacrifice in the short term, because RBI doesn't want a boom-bust kind of GDP. RBI wants a sustained level of GDP growth. So for that, if some level of growth has to be sacrificed in the short term, I don't think RBI will shy away from that. In the past also, RBI has taken similar measures. If in the future, if that is required, RBI, I don't think will shy away from taking such measures. So therefore, I think if the inflation goes up, RBI does not have much choice but to go for inflation, given the fact that if the economy is growing at 8%, and even for the whole year, if the economy grows by 6.2%, we can't say the growth is very bad, particularly under this global milieu. So I don't think it's a crisis situation so far as growth is concerned. So RBI has to focus on inflation control.
All right, and not just RBI, in fact, government also hoping that it eases the burden on people, given how expensive it has become to cook, how expensive it has become to, fetch vegetables, buy essential items for that matter. Reports also coming in, Krishna, that the fact that LPG cylinder rates have been revised downward, cut by about 200 rupees, is also somewhere going to affect or impact rather inflation and ease pressure on people.
That's something I want to ask Sujan as well. Sujan, at the end of the day, controlling food inflation is literally not in any kind of policymakers' hands at the way the situation is right now. When you have a crop that hasn't yielded enough the way we want it to, then there's a problem. There is clearly supply side constraints that is leading to food inflation in the country, and that really doesn't become upon neither the RBI nor the finance ministry to come up with policies to deal with that. The point being, who deals with that?
Yeah, please go ahead. See, obviously, supply-side inflation is very difficult to control either by the government or by the RBI. And still, government has some levers in terms of export ban or taking recourse to import or giving some level of cross-subsidization, as in the case of LPG cylinders. RBI has only one policy, which is a very blunt measure. RBI can either increase or keep the interest rate unchanged or reduce the interest rate. So in that sense, for RBI, fine-tuning in response to different sources of inflation is extremely difficult. RBI doesn't do selective credit control, which RBI used to do earlier. So therefore, if it's, but having said that, it really doesn't matter whether it's a supply-sided or demand-sided inflation, because it ultimately gets transmitted through wage price spiral. So it's very important for the central bank to address inflation irrespective of whether it's supply-sided or demand-sided. It's not that you are trying to reduce the supply-sided inflation. What you are trying to do is to stop the spillover of the supply-sided inflation into demand through wage price spiral. Right. So that's why the causality is very different.
Right, Sujan, at this stage, the only thing I have to ask is that we're all awaiting the GDP numbers. Now, the question always is, when inflation is high, you want to step in with policies, hike interest rates, then the direct impact of that is usually seen on GDP
on people and growth and consumption.
Yeah, so you have a situation right now where we are hoping for better and better GDP numbers with every passing quarter. At the same time, you want to, we are in this rate hike pause moment, so to speak. The RBI has paused on its rate hike cycle with a chance that there could be another rate hike coming if there's the US Fed decides to hike it further than what people expect it to be. And now you have inflation to deal with. Now, talk to us from just a pure interest rate perspective. And as we are at the threshold of receiving new GDP numbers, from your own expectations, from that perspective, how are these two going to go going forward?
So, RBI has the twin objective, both to have policies supportive to promote growth and also to control inflation. So it's a catch-22 situation in some sense that having said that, as I said, in terms of long-term growth, India's current growth is not significantly lower than the long-term growth. In terms of current inflation, it's significantly higher than the long-term inflation. So I think the choice is very clear. The choice is very clear for RBI. If you have high growth, high inflation, the typical monetary policy recommendation is to go for rate hike or go for liquidity withdrawal. But having said that, we have already seen very significant amount of monetary tightening, not only in RBI but also globally, and so therefore there will be some delayed impact of that on growth. So that also cannot be totally ignored. But My sense is that RBI would wait out for a couple of more data points before taking a decision to hike rate. So RBI's as of now, the stance should be wait and watch.
All right, and as we wait and watch, just about under an hour before the numbers come out, and before I let you go, we're also showing in fact numbers as far as Q1 GDP for various other countries is concerned. So China, UK, Japan, Germany, US. China's GDP grew at 6.3%. UK's GDP increased by merely 0.4%. Japan by 6%. Germany contracted by 0.2%, and US grew by 2.1%. Different story playing out in other developed markets, developed economies. China, of course, leading the pack there, but it's a different story with China. We can never trust the numbers.
With the lowest of expectations from India, India would still be beating China, for at least for the latest set of numbers are concerned, which is, fact of the matter is that over and above our discussion on inflation versus growth, I think, those numbers, Sujan, if I were to ask you one last final take, you and I both know at this stage that the numbers that are going to come out are going to beat every other country on that list of GDP numbers. What does that mean?
See, we actively track about 100 countries in terms of growth. And India obviously is the fastest growing major economy in the world, though there are some minor countries which are growing faster than India. But as you rightly said, among the major economies, and if you look at, this is not just for this quarter, or this is not just for this year. If you look at the IMF forecast till 2028, every single year from 2023 to 2028, India is going to be the fastest growing major economy of the world. So that basically means we are on the moon. India is the fastest growing major economy in terms of macro performance. Most of the areas are doing well in terms of corporate performance. Our corporate growth rates are generally significantly better than most of the peers. There is a lot of domestic money getting into the Indian equity market. There is foreign money again which has come back to the Indian equity market. The market valuations are slightly stretched, but still not extremely overstretched. So generally, very good news for the economy, good news for the market.
All right, India remains fastest growing, developing economy, major economy, not just that, going to be a $5 trillion economy very, very soon on its path, leading not just emerging markets, but also leading various developing markets all out there. But I think those numbers will be interesting to watch out for. We'll get you those numbers as and when they come out. But for now, I think we'll have to wrap up this bulletin. Sujan Hajra, thanks very much, sir, for taking time out for joining us. Appreciate your inputs here on News 9. But with that, it's a wrap on this bulletin. Thanks very much for watching.
He thought he could outlast us. And 1 year later, the evidence is right here in this room.
Who will blink first?
So far from preventing the expansion of NATO, Russian actions have actually resulted in the expansion of NATO.
It's a mess for Russia and it's a mess for the Western world, for NATO and the United States.
Putin is a dictator, and if he loses, that means the end of his regime, and probably of him personally. So he has to keep going.
Year 2, no end in sight. Streaming now.
दिल्ली के महरौली में 35 टुकड़ों में अपनी गर्लफ्रेंड को आरी से काट डाला।
पॉलीथीन में लाश के टुकड़े होते थे।
पुलिस की टीम तलाशी अभियान चला रही है।
I was quite shocked. It was just unthinkable. I think it was just monstrous. It was beastly and abominable.
From the word go, it seems until today that this gentleman is a textbook example of antisocial personality disorder or psychopathic personality.
It's a very, very heinous crime. It's a very, very gruesome murder. Only it can be performed only by a butcher.
You know, the whole of Delhi and NCR region woke up to this horrible news.
A resident in Mehrauli had no idea that Aftab and Shraddha were shifted to one of the residential colonies. Their fate would end up like this. When the news started filtering in about how Aftab butchered Shraddha and cut her into 35 pieces, everybody was stunned.
This was the terrible end of a toxic relationship that went horribly wrong. These people, Shraddha and Aftab, had left their families to be together. Now in Delhi, there was trouble in paradise. Shraddha wanted marriage, while Aftab was reluctant. Matters came to a head with a massive showdown. Gripped with rage, Aftab strangulated Shraddha. Aftab was an avid fan of